If the housing market in 2021 was way too hot and the housing market in 2023 was way too cold, then maybe, just maybe, 2024 is going to get us closer to being just right. As the market kicks off this year, we're already steadfast into 2024, which is a leap year, by the way, do not forget. I want to start by diving into news from the Fed's first meeting of the year and unpacking what it means for the real estate market, especially when I say everything now is unlocked. Let's go. Headline news, everybody knows this already. The Fed is keeping the interest rate steady. When they met last week, they decided to keep the policy interest rate unchanged. Remember 2022, 2023, combating inflation, the Fed benchmark rate went up, mortgage rates went up, interest rate payments on all your credit cards, car loans, prices of everything went up, and then things started to settle down last year, but there was so much volatility, you couldn't predict the future even if you wanted to. So a lot of that volatility has now come to a pause. It looks like inflation is kind of under control. I'm gonna get to that though. But here's the best thing about the moment that we're in right now. With the Fed keeping rates unchanged, what that means is that the consumer, the buy side, the sell side, and the agents and brokers in between, and the vendors, and the mortgage bankers, etc., can predict at least 6 months into the future. Now, anything can happen. We get hit by COVID, there could be another major global conflict, anything could happen. But for all intents and purposes, right now, at the beginning of 2024, we can basically predict the way the world is gonna look 6 months from now, which is why I'm calling this period of our housing market unlocked. Because if we look back to where we were in 2023 and in 2022, when the majority of home sellers were locked in to their homes because they had a low mortgage rate, where 90% of the loans in the United States alone were under 5%. So why would they ever leave? All of a sudden their mortgage became a financial asset. Why would they ever sell? Now, if we know that rates aren't going to go drastically up or even drastically down, a good portion of those sellers are starting to become unlocked, which means inventory is going to start to come back to market, which means buyers who've had this pent-up demand over the last year to 2 years are going to start jumping on properties. Now, this is a good thing and a bad thing. It's a good thing because it's bringing more inventory to the table in what has been a historic period for low inventory across the global housing market. It's a bad thing because more buyers in an already tight housing market is going to put more pressure on prices, both for the home the seller is looking to sell and the home that seller is looking to potentially go and buy, unless they're looking to rent something. But what this all creates is activity. Week over week now, we're seeing greater listing activity in every market that Serhant is in. Week over week, we're seeing greater contract activity in every market that Serhant is in. Our signature division is selling more now, that's $10 million and above, selling more now than ever before since we started the company in 2020. That's inclusive of the 2021 hot market. So it feels like the bathwater of the housing market is getting to be just right. And it doesn't mean it's the bathwater that we're used to from 2019 or 2012 or 2006. It means we're in a new bath, the new normal, where we've got a presidential election coming up that's kind of a rerun. So you can predict the next 6 months, you can kind of predict towards the end of the year too, because you kind of know what's gonna happen either way. But hold on to your hats, because there's more. Is the inflation battle over? Powell raised a big question. Is the recent good inflation data a true sign of a sustainable path back to normal, or is it just a blip? Now, inflation isn't just a monster under my desk here, right? It's an economic phenomenon that's tricky to tame. We've been through it before. But with the economy recovering from the pandemic and supply chain issues easing, we might just actually see inflation getting back in its lane. You also have an impact on home buyers and prices that I just want to dive into a little bit more. Now, with a strong job market and low unemployment, people are feeling confident not as confident as we want everyone to feel, but there's definitely some confidence in the air. And that confidence could lead to more home buyers jumping into the market. And wait, what's that sound? What, did you hear it? Oh, that's the potential of home prices going up, like I mentioned earlier. But remember, high inflation can also make customers think twice before splashing the cash. Now, how does the Fed meeting affect investor sentiment and real estate supply? Changes in monetary policy are like the weather for investors. They're always influencing their mood or strategies, and it can change at any given point in time. Now, this can affect the supply of homes for sale and the intensity of buyer competition. So keep an eye on those investment trends. If institutional investors are scooping up homes left and right, you know that price appreciation is on the horizon. If they're selling off homes left and right, you know that price depreciation is probably in the future. Lastly, how does all this affect real estate agents? Well, I would just like to say, real estate agents, assemble! Agents, this is your time to shine. Educating buyers, educating sellers about how interest rate changes affect home affordability is crucial. You want to get smarter about the marketplace, about policy, about what's happening in your client's world around you. Be the smartest person in the room. If interest rates remain stable, as they are now, or they start climbing again, then buyers might rush to seal a deal because they want to get ahead of future higher monthly payments. Sellers, on the other hand, might tweak their pricing strategies, or you can help them tweak that pricing strategy. It's a delicate dance, and you are the one who's here to lead it, no matter what is invented. ChatGPT is not replacing you because it can't have that open and honest conversation. It can give ideas, it can create voice, put everything into writing for you, but it's not going to change the way you sit with a buyer or a seller to make an educated, large financial decision. And there you have it, folks. A whirlwind tour of the latest Fed decisions and their impact on the real estate market. So whether you're a buyer, a seller, or a real estate pro, staying informed is key. And now you know.